are back at Tax Talk with Fred Stein, CPA, coming to you straight from California. And today we're going to be talking about extensions, what they are, and the myth that extensions increase your audit chances. Fred, will you take it away?
Okay. Thank you for that introduction, Ellie. I'm sure you've heard that famous client question, but if I file an extension, I'm going to get audited. And we want to discuss that along with what actually happens and what can happen when you do file an extension. All right. To people in the tax industry, extensions are a good thing. It allows us to do the work without being rushed by any deadlines. So we can take our time and make sure it is done properly. I promise you this, it does not increase your chances for being audited in any way, shape, or form. What increases your chance of being audited is preparing a sloppy return and by having deductions in there that you should not have in your tax return. The extension has nothing to do with any of that. So what happens when we file an extension? All right, we have two things that occur at April 15th, the deadline date during a normal tax year. We either have the return filed or we need to file an extension so we have more time to file that tax return. That extension is an extension of time to file. It is not an extension of time to pay what you owe on your tax return. All right, so we have a failure to pay penalty and a failure to file penalty. Filing the extension eliminates the failure to file penalty, which can be quite expensive. The failure to pay penalty is not fun to pay, but it's a lot less expensive than a failure to file penalty. If you file an extension but don't pay what you owe by April 15th, penalties on that payment will start accruing as of April 15th going forward until the time you do pay your return. Once again, we have an extension to file, not to pay.
What about audits, Fred? I heard that extensions increase your chances of getting audited by the IRS.
Yes, I might have heard that 1,000 times or two during my career. Every client wants to file by the deadline because they believe they have a bigger chance of being audited by the IRS. That's not how it works. The IRS doesn't go through those returns filed after April 15th and look for, oh, they're on extension and audit them. That's not happens. The IRS gets returns from January all the way through December for returns that are filed timely, returns filed on extension, and returns that are filed 2, 3, 4, even 6 years late. That doesn't determine whether you get audited or not. The IRS has this super secret formula that we've been trying to figure out for decades. Tax professionals have some thoughts on what generates a red flag for audit, but these are really just educated guesses, and not one of those educated guesses comes back and says, if you file an extension, you're going to get audited. All right. If you file a return late, you will get audited. That is not true in any way, shape, or form. They have that super secret special source formula that they use. It's actually called a diff score. And it basically gives different point values to different types of activity in your return. And the higher that diff score, the more chance of an audit occurring. And none of that pertains to an extension. So the main thing you want to do when you file your tax return is to file an accurate tax return. If you've got a business, you've got rental property, you've got other items that you're deducting on there, don't fluff them up. All right, fluffing up your expenses is going to be the fastest way to get to an audit, as opposed to doing the return properly.
All right, thanks, Fred. Really appreciate you taking your time to speak with us today, and we look forward to our next Tax Talk with Fred.